Hi and welcome to the last presentation at ABG's Investor Days seminar. My name is Christer Lind, I'm Head of Research, and as last company we have Chargeamps and Anders Bergtoft that will present the company. Very interesting. And well, the floor is yours, Anders.
Thank you very much. Hello, everybody. I will start by talking a little bit about Chargeamps. So what is Chargeamps? We're a Swedish company and we're a pure play EV charging solution provider. And what does that mean then? So we actually provide premium sustainable charging solutions with superior user experience. So we do both the charging stations, as you can see there on the left. Two of our main products is the Chargeamps Halo and the Chargeamps Aura. We also do the cloud platform and all the applications around it to monitor and manage one single installation or a large installation with many chargers. We do also all the different accessories and cables, etc., needed to run such an installation. We have a 10-year track record as a company, and we do smart connected chargers that are with really a premium design. All our products are made in sustainable recycled aluminum, and that's also one of the key aspects that differs maybe our products from competition. Our products, they focus on the three use cases for AC, that's home, work and destination. Also, if you know a little bit about the EV industry, it's a market that really grows a lot and has high growth not only now but for many years to come. We have an asset-light and scalable business model, and you could say that during the last couple of years we have grown a lot. So it was the second year in a row with more than 140+% growth. So last year we grew 145%, and we sold for nearly 250 million SEK, so 254 million SEK. That took us to the number 2 position here in Sweden, and we are the company that also grows the fastest. We have a strong gross margin with 42%, and today roughly 24% of our sales is to distributors that are based outside of Sweden. We have sold our products into roughly 15 markets, all the way from Australia, but our main focus is actually on Europe, and that's where our main business plan is based on growth in Europe. If you look at the market as such, it grows quite a lot. So in the coming years, we will see that in 2025, it will roughly be 4.7 billion euros, and it consists of both 3.4 billion in hardware, but also another 1.3 billion in software and technical operations. So we really see a future also coming from software and support and service revenue. Today, most of our revenue comes from hardware, and that's where we see the big growth is coming from. If we look at the runner-up position that we have in Sweden, we are closing in on the number 1, which is Garo, also listed here in Stockholm. And last year they lost 2% market share according to a market study done by ADL. We grow 8%, and another company called CTEC, also listed here in Stockholm, they grew 2%. So all in all, we are the brand that really takes market share. If you look at the clear differentiators between us and our competitors, I think one of them is, of course, that we are a pure play EV charging provider. So we think and breed chargers 24/7, and we have done that since 2012 when we actually started as a company. We do premium products, really high quality. We talked about the recycled aluminum, but it's also in the way we design and also produce these products. So we make them here in Sweden, and we are proud of that. We also focus on the most, the largest, I could say, AC use cases, so home, office, and destination charging. We also have a scalable and distribution-based business model. And we also have a very strong R&D focus, so we try to really go far in technology leadership, and also we have a software heritage from really when we started. We were early out with both, of course, doing the hardware, but also doing the cloud platforms and the apps to run these chargers. If you look at competition and compared to the other two main Swedish competitors, you find some of the differences here listed between us and competition. And I think what really sticks out, of course, is the difference in how we design our products, the technology leadership. We also have the products that we have, they are vehicle-to-grid ready. So when vehicle-to-grid is really launched from the car manufacturers, we can add those functionalities to our products as well. Price-wise, you could say we are in the medium range. And as I said there, we have a strong focus also on R&D. So all in all, that takes us to a very strong position as such. If you then take a little look also on the software side, we have a number of things coming out, of course, from a hardware perspective. But from the software side, we have also a new installation app coming out that will really help the installers to install the products even quicker. So that will reduce time for them and also save costs, of course, for the future. We also have things like smart watch functionality so that you can actually manage your charger and make it very easy for you to check how the charging is progressing on your smartwatch. We also have green charging. Smart charging is, of course, something that is really important. You should charge your car when the electricity is available and when it is as low priced as possible. But when you connect it with solar panels, etc., then of course you would like to also charge during daytime, etc. And we have a new functionality for that as well coming out now in Q2. Then if we take a little bit also look at the financial track record of the company. As I said there, we have grown considerably during the last couple of years, and already from 2020 to 2021, we grew 142% and then 145%. And if we look now for the rolling 12 Q1 last 12 months, then we can see that we have 98% growth in net sales. Also, if you look at the Q1 figures, we sold for 67 million SEK, and we had another 16 million on top of that, but it was invoiced quite late in the month, and it didn't reach our customer until the first week of April. So that will actually come in the Q2 figures. But all in all, then we would have had 65% growth as well in Q2. If you look at the growth that I talked about, and if we compare to our other peers here in Sweden that are listed, CTEK and Garo, you can see that we outperformed them on the growth quite a lot actually. So 145% for us. Last year, CTEK had 92% and Garo had 52%. So that's our track record in that sense. If you look at the gross margin, then we have also a strong margin. I talked on the first slide there around 42%. You can see that it has been consistently going up since 2019, 2020, and now last Q1 22, last 12 months, it's been just around 42%. And if you look in the actual Q1, it was 42.1%. So all in all, we have managed to keep it high, regardless that today's situation with the higher freight costs, etc. But it has really helped us to keep it up. As I said, that we make all our products also in Sweden. The components, of course, come from different countries, but we are really proud of making the products here. We have two facilities, one in 1 hour north of Stockholm in Norrtälje and another one in Torsby. And we don't produce our products ourselves, but we do that through our contract manufacturer, which is then Note. They're also listed on the Swedish stock market. If you look at the OpEx situation, we have basically raised money now also in Q1 here, and we're basically investing in three things. One is, of course, technology leadership, so product development. We have quite an extensive hardware and software roadmap in the making. The second thing is then also the go-to-market. So we have also launching in a number of markets across Europe. So we are, of course, a leader here in Sweden, but we also have business now in the Nordic countries, as well as in the UK, in Dach, in Benelux, and also in Spain. We have people on the ground, and we have set up our businesses there. So you can see here that the EBITDA margin is in Q1 minus 23.9%. But the key thing here is, of course, that we are in investment phase right now. And if you look at OpEx over sales for the coming years, you will see that it will go down by 60%. And that's a big contributor, so it's really a matter of volumes. And as I said, that we have quite an extensive also roadmap in hardware and software, and we're actually launching another product also later this year, which we call A1. That will be quite revolutionary as such. So scale will help us, and also today we have quite a lot of consultants, so I foresee that the cost will go down over time and also be much more positive next year. We have also historically been, of course, EBITDA margin positive. We were that in 2020 last quarter, and then after that we started to do heavy investments in R&D and also building and scaling up the organization. If we look at the financial targets, sort of long term, we see that we have basically a target of organic net sales of more than 1.5 billion in 2025. We will also be EBIT margin positive next year, and we see that we will have an EBIT margin in 2025 around 15-20%. We don't intend to give out any dividends. We will keep all the money in the company to develop the business further, you could say. So all in all, no, there was no end slide there, but all in all, I think the whole company as such, I mean, we have some quite interesting things ahead of us, and we are basically focusing on a number of segments that are really important. So if you can charge your car at home, or if you can charge your car at work, then of course AC charging that will be your bulk of the business. That's the space that we are in, and we are also we have really a premium quality in our design of our products, but also how we design and the material that we use. So we see the recycled aluminum for our existing range. It will also be bioplastic in the future range that we're coming out with as well. So sustainability is something that really comes as part of our DNA, you could say. So that, I think, is the last slide, because I thought I had another slide, but I didn't.
Instead, we can have some Q&A.
Yes, for sure.
Which is also very interesting. So you mentioned a bit about your product. You mentioned you see it as a premium product. But could you maybe tell what are the key reason why you are winning market shares?
Well, I think it's those simple things, of course, that the end customers, they love our products. The installers like the products as well, because it's easy to install and we have very high quality, so they don't need to change them out because they're not working or so. Also the distributors, because we don't sell direct, we sell through distributors. They are very keen also on liking our products. They can make a good margin on them. So all in all, we managed to grow our business considerably. If you look at the distribution channels that we use here in Sweden and also abroad, then it's the electrical wholesalers that really drives the largest volumes. And we have all the distributors here in Sweden that are selling our products. The two largest one, Sonepar and Rexel. They are global brands, and we actually signed a global agreement with Rexel just the other week here. We will send out a press release later this week here on this. That really takes us to another level. So now we can start working with them across all markets, basically in Europe.
And regarding that, what do you think are the key challenges of working with distributors as Sonepar and Rexel?
I don't see it as a challenge, actually. I see it as a benefit because we don't sell direct, so we sell through distributors. That scales quite a lot. The sale is a little bit slower in the start. You need to train the channel, etc. But then when it takes off, it goes quite quickly, just as we have seen here in Sweden. And that's also, I think, why we take market share. So really, you need to work closely with the distributors so that they sort of love you, and you need to be really, give them great support. And the products that really also need to be good, because if they are good, they feel comfortable selling your products to the installers and to the end customers.
And on that, we talked a bit of the software. It's not the core of your product today, but you work a lot with the software development and becoming more and more, I guess, an important part of the total package. Can you tell a bit more about software in general?
So I would say like this. So a charger is actually, it's a charger, but it's also a lot about the software and the cloud platform and the apps that are connected. So today we have a charge point management system to control the chargers. We have the apps to control it from an end user perspective. And today, we sort of offer that free of charge together with the charger. I see long term that we will start to charge also for the cloud platform for different type of customer segments, like housing associations or corporate customers or charge point operators using our platform. We have produced more than 104,000 charging points actually to date. So I think in the future we will also see more revenue coming in from the software side. But we have a very good and stable cloud management platform today.
If you address the more short-term issues we have seen on the news, like supply chain issues, and some of your competitors have mentioned that also, how do you handle the current situation?
So we, as I said there, we don't produce the products ourselves, so we do that through the contract manufacturer Note. And together with them, we have like an 18 to 24 month forecast. So we are already nearly 2 years out in terms of securing the components that we need to follow our business plan. So we've been early in doing that. So we have managed to, during last year, both grow our business with 145%. We also managed to build up a stock. So I basically have 2 to 3 months of sales already in stock today. So that's really a tight collaboration with Note. Also, this tight collaboration have actually resulted in that we are one of their largest customer, which I think also is very important. So it's really the long-term focus. We see that in the existing product range that we have, I don't see any huge problems with the components. In our new line, there we have still a few components that are hard to get, but we're working very hard together with Note to secure those volumes so that we can start building the products later this year. So it's really hard work.
I understand that. If we go a bit, you mentioned a bit about your market share in different markets and the rollout strategy. Can you give us a bit more flavor on that? How big do you want to become?
Yeah, no.
And where do you start?
Yeah, so how big do you want to become? But we're number 2 now in the Swedish market, which is great, of course. Our ambition is to be number 1. So as I showed there, we're growing faster. The number 1 today is Garo, of course, and my intention is to be ahead of them by end of next year, and I think that is possible for us to do. And then if you look, we have started entities now across the Nordic different markets. So we have people on the ground. We have signing up distribution agreements with the local distributors, both the global ones like Sonepar and Rexel, but also the local ones in each market. So that's sort of our home market. Then we have, of course, where I see the larger volumes coming from in the future. That is, of course, the Benelux region, DACH, so Germany, Austria, and Switzerland, UK and Ireland, and also Spain and Portugal. So we already have people on the ground there. We're working on that and participating in fairs, training up installers, etc. So really, it's the European market that we are focusing on now. It's big enough, you could say, to start with. But we also see interest, of course, from other markets outside of Europe. But we've said today, let's focus on Europe, and that's what we're doing.
Yeah. You mentioned A1 as the new product.
Yes.
I don't know if that will be the name in the future, but you mentioned that it's a bit revolutionary. You about the launch. Maybe you can give details, but why is that such an important next step for you?
Yeah, we call it A1 now. When we launch it, we will call it something else, a little bit more sexy than A1, but it's the prototype name. So what it is quite a revolutionary charger. So what we have done is that we have really prepared it for automated production, so we can build it together with Note much quicker, with even higher quality. So that, of course, will make for a better margin for us. Also, the product as such is actually fully recyclable. So after end of life, it can be dismantled and then fully recycled. We also have what I should call maybe what do I call it? I call it a module concept. That's what I call it. So you can add hardware modules to it as well. So next thing in the auto industry is the vehicle to grid. So when you can not only charge the battery of your car, but you can also take electricity from the car. So then instead of buying a new charger, you can just slot in the vehicle to grid module as one thing. Or next thing is also home automation. How do you connect different things? Everything from solar panels to different things. Then, of course, a smart charger is very important. So it's a well-designed product. We have also we have a Linux-based software code in there. So it's really a state-of-the-art, high-end premium charger that we think a lot about for our European markets.
And when will that be?
It will be out later this year. That's what I say now. So I have samples at the office, and we can charge on it in our garage. But we will start after summer to start up production and make sure everything works. And then over time, later this year, we will launch it more publicly.
Yeah. Regarding cost inflation, which we have seen in general, how have you handled that in order to keep your gross margin above 40%? Have you raised prices on your products, or?
We have actually not. We are increasing the prices a little bit now, but we have managed to. Of course, we have increased prices in freight and stuff like that. But the beauty with this business is that you can actually increase the prices twice per year towards your distributors. And there are a lot of different things that you can play around with, not only the price, but it's volume rebates, it's kickbacks, yearly bonuses, etc. So all in all, you can tweak this a little bit so that you can keep the margin at the level where you want to have it. But this is something that we work hard with, and so far it has worked well, and I see that also going forward. So.
Thank you, Anders. I think we had received a lot of good answers on my questions here. So looking forward to see more of you in the future and the company. So thank you, Anders.
Thank you very much. Thank you. Bye-bye.